How we doing, traders? Good afternoon. Are you guys ready to dive into an action-packed show today? We got another great one for you. We'll get into the topics of today. We'll be looking at pending home sales. We'll be also watching, of course, the earnings from Google, Microsoft, Boeing, Shopify, Chipotle, Enphase, Waste Management, Hilton, T-Mobile, Heinz Craft. And then we'll talk a little bit about PayPal activists and Kathy Wood selling some Coinbase, and of course, an FOMC outlook. We'll actually be getting into it there at 2 p.m. We'll get the release there. And of course, the fireworks will probably come after at the 2:30 on the press conference. We'll come, of course, be having that on right here on Benzinga. So you guys don't got to go anywhere. As soon as the show's done, look for the FOMC conference stream. You guys can watch that. But what I will do is I'm going to actually go a little bit past 2 p.m. today. If we can hit our like goal, so I'm going to set a like goal of 100 likes. Let's see if we can get it on up there. If we get 100 likes today going into that number release, I'll stay on here and kind of at least, give you a quick overlook of what I saw hit the tape. Of course, I have the Federal Reserve pulled on up. So we'll see when that press release comes out at 2 p.m. Of course, the press release comes out, and then they have the conference at 2:30 p.m. Eastern. Now, let's get out of the topics. Let's talk about what actually happened today. Of course, we're going to be watching if the Fed is going to go ahead and do a 75 basis point. Of course, that's what the CME Fed Watch tool is pointing to. So widely expected is the 75 basis points. Of course, we'll see if for any reason we get something different. And of course, to keep it on radar, Thursday we'll be getting that GDP report, right? I think it's important to keep on watch. Do we come in negative? Do you hear more talks about recession? Of course, keep that on your radar. All right, let's go ahead. Let's catch on up. What's going on out there, guys? How we doing? All right, let's get started. Let's get into the headlines of today. Do want to get into that. We're going to dive into the first thing is, like always, what was hot and what was not. Let's take a look at the overall market and what is trading good today. So if you take a look, the SPY actually got up there towards 397. Looks like we're bouncing up into this range here and just keep battling into the range. So what I would point at now is just take a look here. Last time we did this, we kind of bounced a couple of times, eventually getting wiped out. That's what I'm going to be watching this time. What happens when we get back to the 400? Do we just start battling in the zone and then eventually get wiped out again towards the 370s? Or are we going to hold up here and be able to get through it with some good reports or not? Technology leading us up today from the open and overall up 2.65% from the open, 1.18. What was doing well in technology? Well, we can take a look here. Solar having a really good day. Of course, this is coming off the heels of the Enphase earnings report. We'll talk about Enphase earnings coming on up, so stick around on that one. Not going to get too in-depth on Enphase, but what opportunities are out there right now in solar? What's doing well? Well, solar also runs, Enphase runs with SEDG. Of course, you would have got that if you were watching pre-market prep this morning. Dennis Dick mentioning the relationship and not a bad trade right out the gates. This was still going up in the pre-market. We were looking to see if it would get up about above the 315s, and it held a nice little push there towards the 324s. Keep that one on your radar. It's not the only one up. If you take a look, you'll see Run up, you'll see Sol up, you'll see Nova up, you'll see First Solar. A lot of these doing well. SPWR. JKS up also. So keep these ones on your radar. If you do want to play kind of an ETF, you could play the TAN. You can see TAN up significantly today. Not a bad name. Only has one name in the red today. So good exposure there in solar if you're looking for an ETF. What was also doing good in technology was some software infrastructure names. So, of course, we're getting some bounce back by some of the leading cap names. Of course, Microsoft earnings coming on in. That's a big reason why you're seeing it up. But also Oracle not having a bad day. Adobe not having a bad day. You're seeing some other ones here that you guys can keep watch. VMW having a decent day there. SQ, look at Square sneaking up there with a 4.8% day. So some infrastructure stocks. Of course, this is software infrastructure. We saw software applications really get hit hard. They bounce back some today, but definitely more of the focus is in the infrastructure. And you guys can see it from the tapes here. All right, let's continue going. Let's get out of technology. Let's take a look at energy, getting another leg on up. Full disclosure, still got some Oxy on right now. Actually, no, I just got stopped. So don't got to worry too much about that. Got stopped out. I didn't really catch this one after the 1 p.m. if I would have got stopped or not. But it looks like I did get stopped out, so don't got to worry about that. Going to continue to see if this is going to come back up. XLM holding pretty well. You guys can see here on the daily, it's actually not looking too bad. Look at Chevron up about a little bit here. And they've been kind of just edging their way back on up. We're wondering, do we eventually get a rally in here or not? Something that I'll keep on watch on energy. What's on the downside today? You'll see defensives are down right now, and defensives are down in what area? Well, they're down in packaged foods. Yesterday, we saw ADM with a good report, but if you take a look, what is in packaged foods? Another earning play. Kraft Heinz getting hit hard off of their earnings. We'll talk about them just coming on up, and we'll touch their numbers, but definitely this didn't only affect this stock. This affected a couple other bigger names too. General Mills down today. Kellogg's down. You'll see it there. You'll see a couple of them. Campbell Soup down. Will this come back? I think you just got to keep on watch. SJM down on this. And all of them really kind of off the piggy banking of that Heinz Kraft earnings report that it definitely disappointed, down about 6.75%. So keep that on your radar. Some bounce back happened today, at least in some of the discount stores after really getting beat up after Walmart's profit report. But we'll see what happens if those are actually can make some comebacks, or is this just a momentary bounce? All right, let's get into some of the earnings. Let's get out of what was hot and what was not. Let's go ahead. Let's cover Microsoft. I want to get into Microsoft and at least Alphabet before we get into our first interview today. We got another great one for you guys, so stick around. Smash the like. I set the like goal at 100 likes. I want to see you guys get to that like goal so that I could stay on just shortly after 2 p.m. and at least maybe take an outlook of what I see hit the tape. Of course, coming on up just in a little bit at 1:15, we'll be joined by Giles Coghlan, Chief Analyst at HYCM. And then at 1:45, we'll be joined by Sam Stovall, Chief Investment Strategist at CFRA Research. So we got a lot to talk about, some great experts. Let's dive into first Microsoft earnings here. What actually got this up, right? I know a lot of people are probably asking themselves, well, I saw a miss and a miss. What happened here? Well, let's take a look here. It actually is trading on up in the intraday, trying to get back to some of those highs that you saw on the pop. Let's talk a little bit about their earnings here. So Microsoft EPS coming in here at $2.23, missing the $2.30 estimate. Sales at $51.9 billion, missing the $52.47 billion estimate. Intelligent Cloud segment revenue was at $20.9 billion, up 20% year over year. Xbox revenue, though, was down 6% year over year. Microsoft did confirm that it's on track to expect that double-digit growth in sales and operating income in fiscal 2023, with margins roughly flat. What I really think started seeing everything move, of course, was Azure and the growth in the cloud, right? Microsoft gave a 43% positive outlook there. And you also saw positive comments in the demand. And so that it's all about the cloud right now with these bigger companies. You can see that also with, of course, when you look into Google. So let's take a look into Google and Alphabet, and what did we see there? So when you look at Alphabet, you'll see that they missed $1.21, missing the $1.31 estimate. Sales at $69.98 billion, missing the $70.35 billion. Alphabet CFO said that its foreign exchange impact could be greater in the current quarter. Of course, it's coming off the dollar. And confirmed Q2 double-digit revenue growth. YouTube segment was up 4.8% year over year. Google network revenue was up 8.7% year over year, but the Google Cloud revenue at 6.28. I think this is really an important part here. 6.28 billion in the second quarter was up 35.6% year over year. And so this is something I'm definitely watching in that Google Cloud revenue. How could they continue to push? A lot of it, I think, is in the cloud space. And you saw Microsoft point to the same. And I did take a nice little trade on Google today, so it wasn't a bad one here off of the VWAP. Just getting it right out there around the 1040s, 110.40, and then riding it up there towards the high of the day. Wasn't a bad trade. It's up there now towards 112.46, and we were wondering, were they going to stay green, right? Because they got green off of the earnings that really, I mean, you could say they missed. And so it's kind of interesting. Their guidance wasn't that bad, at least. But Google definitely staying in the green today. I was wondering if it was going to go back into the red, and that wouldn't have been an ugly look, because this chart did not look good here yesterday, guys. It looked like it wanted to break down through that 106. Now it's coming on back there towards the 112 and trying to make its way back. You can see the same for Microsoft. This one looked a little bit better. Was looking to see if we were going to get up into this 260, then 266 range. And you can see here, we just pushed right into that 266. Rejected from there, so we're going to watch to see if it can close back above that. Those are the levels that I'll be watching on Microsoft. All right, we can get into some more earnings, but I think it's time to go ahead and get into our first interview of the day. We're going to go through a little trailer here and then bring on, of course, Giles Coghlan. If you guys are excited to get into it, let me know in the chat. And let's go ahead. Let's dive on into it.
I tell all my CEOs, this is a very, very, very important platform. And look, all the other platforms are important too, but you're up there now. You're way up there.
Best investments you can do in your future is actually go and re-educate yourself on credible sites and credible resources like Benzinga. I think you guys have been killing it.
The comment section on this show is remarkable. Like the quality of the combo, and just big shout out to you and your community.
That's what I love about you guys. You know, you just had all your callers in right then. And it's all about the community here at Benzinga.
That it most definitely is always about the community and you guys out here running the show. So let's go ahead. Let's first dive into our first interview. If you guys have a question in the chat, this is your chance. Go ahead and throw it up in the chat. I'll try to catch one at the end and see if Giles can give us some insight. Like always, what this is all about is keeping us in the informational edge. Let's go ahead. Let's bring on Giles Coghlan here, Chief Analyst at HYCM. Welcome back, Giles.
Well, it's great to be here, Mitch. Really looking forward to tonight. So what perfect timing just before the Fed meets as well. It couldn't be better.
Yes, definitely. I know that there's a lot of uncertainty, but the CME Fed tool starting to point to that 75 basis point. Let's start off right off the bat, what everybody wants to hear. What do you expect in the FOMC meeting?
Oh, Mitch, I'm so long in the tooth on this one because I've been constantly surprised by the interest rate decisions. So I'm sort of I've given up even on what I expect. And what I'm focusing on is how I'm going to react to what actually happens. Because it's just been so surprising how aggressive the Federal Reserve have continually been. And I was speaking to CNBC Arabia this week, and they were saying to me, you know, what will the Fed have to do to give a hawkish surprise? And I was thinking to myself, yeah, what would they have to do to give a hawkish surprise? Because if you look at the start of the year, the dollar has been rising on expectations that the Fed's going to hike, and those gains have gone on and on. They were then compounded by safe haven bids that came into the US dollar as global recessionary fears grew. And so the dollar's just been on this really strong march, Mitch. And the Federal Reserve, it's hard to see what they could do to make things even more hawkish. Because, yes, the CME tool is looking at 75 basis points. The short-term interest rate markets have priced in 100% chance of a 75 basis point rate hike. And there's also like a 78 or 79% chance of a 100 basis point rate hike. So even if they hike by 100 basis points, it's pretty much priced in. So what it's going to come down to, and this is what I'm focusing on, is on the growth story.
Why would that be important, Giles? Explain a little bit more about the growth story. Why is that something that we should keep an eye out?
Yeah, Mitch, because that's the heart of the problem. The central banks around the world know that their job is to keep inflation under control. They also know the one tool they have to keep inflation under control is by hiking interest rates. Now, if you hike interest rates, you make debt become more expensive. You also reduce consumers' disposable income. So you reduce demand. That's what brings inflation down. Now, this is what many analysts are fearing, is that central banks will aggressively hike interest rates, but at the same time, they'll bring down growth. Do you see the problem? Because you can't tackle inflation aggressively by hiking interest rates and also stimulate growth. It's kind of like you can have one or the other, and you're trying to hit this balancing act. So that's why the growth story is going to become really important, because inflation is all over the world. I was speaking to another TV media agency this week. I forgot, it's been a busy week.
That it has, Giles.
But one thing they were saying to me was, are some countries going to do better than others about handling inflation? It was a great question. But basically, inflation is equally affecting lots of nations, and even nations like Japan that have very low inflation. Still, you are seeing inflation in little old Japan, which has had deflationary forces in action for years and years and years. So it is going to be everywhere, which is why I think the growth narrative is going to become even more important, particularly in the FX space, as we head in towards the second half of this year.
Yeah, that's definitely something to watch. I've been taking a look at some growth and keeping an eye out. Is this going to be what rallies us back, as it's been what's been hit hard throughout this narrative? Now, one thing that we just recently saw, of course, is Microsoft and Google's report. Can you tell me, and you could explain it to our viewers out there, why we're up on what seemed like a miss?
Yeah, with Microsoft, it was particularly that forward guidance for 2023. What investors are worried about is they're thinking, okay, if the Fed's going to be hiking interest rates aggressively, at what point do companies' earnings start reflecting fears about the future? So we've got I think Facebook still to release their earnings. We've got Apple, we've got Amazon. If they started saying, oh, great, if they beat on both their numbers, but then for their forward guidance, they say, oh, but we see tough times ahead. We think consumers are going to have less money. We're going to be revising down our profitability. Then you would see stocks really tank, and you'd see the major indices tank. And for some of your newer viewers and newer listeners, remember that companies don't have equal weightings in the major indices. So companies like Facebook, Amazon, Apple have a disproportionate impact on the big indices like the NASDAQ, like the S&P 500, like the Dow Jones. So companies' earnings from those big names can not only move the major indices, in turn, they can affect the whole market mood towards risk. So it's really important what these companies are saying about the future, Mitch. So that's what it's all about. It's not so much about now. It's not so much about did they hit, did they miss? Okay, that's fine. But what are they seeing coming? And if companies start getting worried about the future, then that's when you'll start to see indices move sharply lower. But at what point, Mitch, and this is the money point, at what point does the Fed say, okay, we hear the message, we see growth is slowing, so we'll pause interest rates? This is the interesting part for me, because if you look at the June dot plot, what the Federal Reserve said is the terminal rate is going to be, I think, 3.75% for the end of 2023. So what they're saying, Mitch, is we're going to keep hiking interest rates. We don't like inflation. We're going to keep hiking interest rates. What about the economy? Don't worry. The economy is strong. The labor market is tight. The US consumer can handle higher interest rates. It's fine. It's fine. It's fine. But if you think about it, Mitch, they have to say that. So what I'm looking for is any indication today. The hike is almost irrelevant. Whether it's 75 basis points or 100 basis points, that's not what I'm focusing on. What I'm focusing on, like companies' earnings, is the forward guidance. What do the Fed see coming? Do they start to say, well, you know, and we've seen other central banks do this, like the Reserve Bank of Australia at their last central bank meeting at the start of July. They sort of said, we're a bit concerned about household spending. There's the inflationary cost, there's rising interest rates, the housing market's a bit weak. They didn't say they were actively worried. They just had concerns. Now, if we have the Fed saying something very similar, we're going to be hiking into year end, then we're going to assess the economic situation, something like that, then you could see the US dollar sink sharply lower. I would be actively selling dollar yen. And if we saw that, I'd also be looking at buying potentially gold and silver. Gold and silver are very interesting at the moment, both of them coming into a strong seasonal pattern. So if we get reasons for dollar weakness, reason for real yield weakness, dollar and silver should absolutely surge. And if you look at the gold silver price ratio, you see it's edging up towards 100. Now that means silver is potentially much, much cheaper than gold. So if you had to choose between one or the other, silver should be the one set to soar. And the last time the gold silver price ratio was over 100, you could look back to COVID-19. And that was one of the, I traded it very badly, Mitch. I saw it all technically beautifully. And yeah, I moved up to the next resistance level, took it perfectly on the wider time frame. It then went on hundreds and hundreds of points without me. So I didn't trade it very well. So I'm looking for a second bite at that cherry. And it's in a very similar setup to what happened earlier in the COVID-19 crisis. So your viewers need to look at that. They need to understand the gold silver price ratio. I've got loads of articles on my blog about it. It's basically when silver is better value than gold. And if we get any dovishness from the Fed, gold and silver could be fantastic opportunities, as well as dollar yen short and long NASDAQ S&P 500, as well as pound US dollar long. That's what I'm looking for in a dovish surprise. Hawkish surprise, I'm not so interested. I just can't see them doing it.
Something to keep on watch, right? I mean,
what would be keep on watch? What can they actually do?
Yeah, exactly. What would be hawkish? Is it higher than 100 basis points? I mean,
yeah, then, Mitch, but even then, what you got to remember, look at the ECB. They hiked by 50 basis points, didn't they? But then they said, oh, no, we're not moving the terminal rate higher. We're just hiking, we're getting the interest rates done more quickly. Why? Yeah. Because they see growth slowing. So they better think, well, if we don't hike interest rates now, we're not going to be able to do it. So we need to hike quickly to cut. And that's why the euro sold off, right? So
we're trying to get up there.
Interest rate, Mitch. It's not the interest rate. It's the forward guidance.
Forward guidance, definitely.
So even if they hike by 150 basis point hike, and then they said afterwards, gosh, you know, we're trying to get this done as quickly as possible, then you would probably see a perverse reaction and the dollar selling off sharply. You'd see this sort of surge higher on the news, and then as soon as the detail came out, plummet.
Hey, well, keep it on watch. There you guys see situational thinking. I like how you played it all out there for us, Giles. And I appreciate you also bringing in there the idea that if this does happen and you do see that maybe that dollar drop, that silver might be taking lead over gold. Something that I always like watching definitely is to find those rotations. We'll see if the rotation comes into that play. Now let's take a look now. Of course, Meta is reporting after the bell. What do you expect maybe potentially coming out of this report?
Again, Mitch, you'll see that I'm on a one-track mind here. And remember as well, my main area is trading indices and trading FX.
Focus on the rotation and what's out there.
Yeah, so I don't tend to focus much detail on individual stocks. So earnings as a whole, what I'm just generally looking at is what I've already shared about how the major companies are projecting their 2023. And as long as they're seeing consumers, like with Visa earnings, when the CEO said not seeing much signs of a slowdown in consumer spending, that's good. So I'm looking for Facebook showing optimism that they're seeing continued user demand, continued revenue stream heading into 2023. So that would be what my focus will be on in terms of the overall market sentiment.
Now, one thing that I did see mentioned by Citi economists today was the possibility of recession in Europe now seems clear cut. What would you say about that comment? Do you feel that it's kind of clear cut in Europe?
Yeah, well, it's been coming for some time. We've been seeing a series of PMIs, and they're the Purchasing Managers Index, and they're forward-leading indicators. And what they've been indicating is that things are slowing down. New orders are slowing down. Confidence about the future is slowing down. And if you think about it, Mitch, just from a geographical point of view, if you are next to Russia and Ukraine crisis, you've got the Russian government who control 50% of your energy supplies coming to your entire continent. There's been that issue with Nord Stream 1 when they cut that supply down to 20%. And mark my words, Mitch, that is a strong message that Russia is saying to Europe, which is that we are in control of a lot of your energy. So, leaving aside the actual mechanics of the turbine that was, not on the way, it's a way of underscoring a point, isn't it? Yeah. So confidence is very low. Consumer confidence is very low. New orders are low. The ECB faces high inflation that's continually moving higher. And what can they really do? So I think a recession for the Eurozone, like the UK, the Bank of England projected it for 2023. I think we're certainly heading there. Now, my favored pair to express that will be the Euro-Yen short. If you look at the seasonals, you'll see that the yen is coming into a period of strength. So once this FOMC meeting's out the way, I wouldn't be surprised to see the Euro-Yen sell off heavily just once the event risk is gone. So I could see strong selling in the Euro-Yen over the next sort of 2 to 4 weeks on that narrative that you mentioned around a Eurozone recession.
Well, perfect. I know I'm going to keep watch on the dollar, and I'll come back to you, Giles, to see what we get out of that play and what happens today, of course, on the FOMC. Appreciate you bringing some situational thinking, and we'll see what happens when it hits the tape. We'll have you back on, Giles.
Mitch, it's been a pleasure. Thanks for having me.
Always. All right, there you guys got a lot there from our first interview. Giles Coghlan, Chief Analyst at HYCM. Let's dive on into some other earnings on out there before we get to our next interview. That's going to be coming at 1:45. Just coming on up. We got about 15 minutes. And yes, I do see a lot of people joining in the chat. What will happen at 2 p.m., you'll get the FOMC. They'll get the press release on out there, and then you'll get the conference call at 2:30. So stay tuned for that. At 2 p.m., if we get enough likes, I set 100 like goal out there. I'm going to go ahead and try to stick around at least a couple of minutes to see how the reaction hits the tape, and we'll see how the SPY reacts there. Of course, it's been kind of an up day. We'll see if that trend changes going into it. Right now, let me take a quick little peek at the SPY, see what we're seeing. We're trading at 396 right now, rejected that 397 push, and it's going to be interesting. Do we close up on the day or do we close red? I'll throw it to the chat. What do you guys think? So put a 1 if you feel that we're going to close the day green. Put a 2 if you feel that we're going to swing around and maybe close red on the day. We'll see what happens. Let's get out of the SPY. Let's go towards those earnings. Got a lot to talk about and few little time to talk about it. So let's go into that. Boeing is the first one up here. Let's get into that. Boeing has been getting out of this 148 area. It's interesting to keep an eye on it now. A lot of kind of positive catalyst has been coming out, right? You started hearing talk of deliveries. Well, here is Boeing actually missing on the EPS here at a loss of 37 cents, missing also on the estimate of 16 cents there. And it's interesting to see, that this was actually up in the pre-market, turned around on a dime though, right at the intraday. Look at that, just drop right out the gates there. back down there towards the 154, or actually down below where it kind of closed yesterday. So Boeing just giving up some of those gains there, and we got to keep on watch. One of the things that Boeing did, though, report was at least a positive operating cash flow. So keep it on watch. I think this is a pullback that might have an opportunity once we get towards the 148s. Right now, it's just hanging out, but getting into the red there. All right, let's continue going here. I see the votes in there. I wanted to take a look at the votes. What did we get? We got some ones. We got some twos in there. So it looks like, well, we got 4 1s, 3 2s. Little mix there. Ooh, it's a battle there. I see you guys. A little bit of a mix. We don't know. Don't worry. I don't know either. And that's one thing that we never know is what's going to happen further. But one thing I will tell you, and this is from Mark Douglas. If you guys don't know who Mark Douglas is, it's from my favorite book, of course, Trading in the Zone, Psychology Book of Trading. And one of the quotes that he says, you don't need to know what's going to happen next to make money. I think that's an important thing to keep in mind. You don't need to be predictive. You might need to be more reactionary. Then you can go ahead and profit. Let's get into SHOP, though. SHOP actually getting some lift off of horrible news lately. So definitely bouncing on back here. I'll show you guys the chart. EPS coming in here at a loss of 3 cents, missing the 3-cent estimate. Sales at 1.29 billion, missing the 1.71 billion estimate. Shopify, of course, talked about cutting the 1,000 jobs. And then they also stated in this earnings that they now expect 2022 to end up being different. More of a transition year in which e-commerce has largely reset the pre-COVID trend lines and is now pressured by persistent high inflation. So definitely Shopify getting hit hard on that. This has been a horrible week for Shopify. It was up there towards 40 just last week. On Friday, we even got to a high of 39.86, and it just flipped on a dime. Went down as far down as 23% down for the week. Now building its way back into the gap. Will it get to 35.75? We'll see what happens there, but definitely filling up some of the gap zone in Shopify. All right, let's continue going. Let's go towards some burrito action in Chipotle, and it looks like it's guac day, baby, in Chipotle as you're seeing it continue on up. Let's take a look at the earnings report here. Q2 EPS coming at $9.30, beating the $9.05 estimate. Sales at $2.21 billion, missing the $2.24 billion estimate. But Chipotle was able to offset increase in cost with several rounds of price hikes. So a lot of the companies always are going to depend on what they're just going to raise the price to adjust from those costs. And it seemed like the consumer did not go away. There wasn't demand destruction because of that rise in price. And it looks like the guac, you can't turn it down. Chipotle getting on up here, making a nice move, continuing the push from, of course, the after hours yesterday, getting that lift up there. We'll see if it can continue to keep the gains on up. You can take a look at the daily chart. You're trying to get back up there to maybe around the 1600s. That's where I could see resistance coming into play. But definitely this one finding some bottom around 1300, already making its way back to 1500. We'll see what happens in Chipotle. You can draw kind of a weekly trend line from the high there, and you can see how we're running right into it. We really want to get up there towards the 1600, get up into that space to start looking nice and bullish, but doesn't look like it's turning around at the time being. All right, let me know if you're a big Chipotle fan in the chat. Let me know. Is it a bowl or are you a burrito type of guy? Let me know. Bowl or burrito? I'm definitely more of a burrito, but maybe it's the bowl with the burrito on the side, right? I like to make my own burrito, but let's continue going out of Chipotle. Let's get into some solar action. As I'm seeing, we talked about it earlier, Enphase was up big. That was what was hot today. And look at this chart. So a lot of people like to talk about that a lot of negative has come out, but look how Enphase has reacted in this year. This year, it started down here around 2022. You got that downturn right out the gates, but in February, you bottomed in solar, at least in the EMPH, and now you're up for the year about 99% there from that low, up there towards 250, got towards a low in January 24th towards 113.40. So definitely ENPH continuing the strength there. Let's talk about their earnings here. Enphase Q2 EPS coming in with what? A beat and a beat. Let's talk about this. EPS $1.07, beating the 84-cent estimate. Sales at 530.2 million, beating the 504.53 million estimate. Enphase sees Q3 revenue at 590 million on the low side to 630 million on the high side after a 548.79 million estimate. Did get a raise in ratings, but Needham maintained a buy in Enphase and raised the price target to 275. 275 is on up here. We'll see if that can get on up there, but definitely a great day there for Enphase as it's pushed out the gates and continue to run. All right, let's get out of Enphase. Let's go towards the next one. I want to talk about waste management. Don't throw me away, guys, for talking about waste management. It's just something to keep on watch. Look at the daily candle on this. Really nice push. And what do you see here? The 200 SMA right underneath it. So keep it on watch. I think it's something that you can look for. And another thing is this stock beat and a beat here. So let's talk about that EPS coming in here at $1.44 and beating the $1.40 estimate. Sales at 5.03 billion, beating the 4.84 billion estimate. So a good day there for waste management. Let's keep it going. We've got a couple more to get through. Let's get to Hilton. Hilton here coming on up there. Looks like lodging and not having a bad day there. You could take a look at some other names like Marriott getting some lift, like Hyatt getting some lift, all coming off of the Hilton earning report. Hilton Worldwide Holdings here, EPS at $1.29, beating the $1.04 estimate. Sales at 2.24 billion, beating the 2.08 billion estimate. Raising the guidance here, a full year adjusted EPS at $4.21 to $4.46 versus the $4.09 estimate. So a raise of guidance here for the adjusted EPS, giving us that raise. And definitely nice little push there. Continuing to move from about yesterday, we're about 4.8%. We'll look to see if that trend line can hold here and it just break on up towards that. You can see it on the 15-minute a little bit clearer. Doesn't get back on through there, through the 128s, getting towards the 130 today. I think that a lot of that will be dependent on some other action in the market, but something to keep on watch nonetheless. All right, what's going on, guys? I hope you guys are having fun. Bowl with tortilla on the bottom. There you go. I see you bowl fans. I see you bowl fans on out there. Burrito all the way, bowl all the way. Come on, man. It's all about the burrito life. I'm not going to lie. My secret trick in Chipotle is all about the salad dressing. You sprinkle a little bit of that salad dressing, get some acidity in there. Tastes pretty good. Let's go ahead. Let's keep going there. Let's take a look at my other stock that I actually have a part of. It's T-Mobile. Do you guys use T-Mobile? Let me know, guys. I'll go ahead and I'll take a look there. Let's see what T-Mobile did today. T-Mobile actually trading on up. Not bad here. The estimates were a little bit off here. So we'll give you guys the number. EPS coming in here at a loss of 9 cents. Not comparing to the 28 cents estimate, which was over, but the sales missing also 19.7 billion, missing the 20.11 billion estimate. They did raise their merger synergy range. And so this is synergy, of course, with different kind of networks. They picked up 5.2 billion on the low side, 5.4 billion to 5.4 billion and 5.6 billion on the upside. So raising the high side there and the low side by 0.2. T-Mobile did raise their free cash flow outlook from 7.2 billion on the low end to 7.6 billion on the high end. And they raised this up to 7.3 billion on that low end, keeping the 7.6 billion on the high end. Let me know, guys. Do you guys have T-Mobile? Are you guys a 5G user? I've actually been thinking, should I go to Verizon? Who knows? T-Mobile definitely not having a bad day there. Resistance right above here, trying to hold above that. You can see here from the closes, this is a 15-minute chart. We'll see if it's able to hold here. You can see kind of like that ascending triangle. You can even draw it over here from this kind of low or the body here. We'll see if it's able to hold that, get on up there through the 140.50 up to 141 and continue the strength, or does it turn around? We'll see what happens there in T-Mobile. I use T-Mobile while eating a burrito. Man, now you're getting fancy with it. Verizon, baby. I might go to Verizon. I'm thinking about it. All right, let's go to Heinz Craft here. I think it's important to talk about this one. There you go. Heinz Craft here, looking at that drop. Man, this one's kind of the disaster on the day. EPS coming in at 70 cents, beating the 68-cent estimate. Sales were at 6.55 billion, beating the 6.39 billion. They declared a regular quarterly dividend of 40 cents per share to be payable on September 23rd. As a record, of course, the ex-dividend date would be August 26th. They did raise their full-year organic sales growth guidance from a mid-single-digit percentage to a high single-digit percentage, something to keep on watch. Definitely got hit, and we saw how it was affecting other stocks in the industry of packaged foods. We'll continue to watch how this affects there, and does it kind of just continue to come down there? Look at the daily candle on that. Definitely a downward day there in Kraft Heinz. We'll see if it takes out kind of these body lows. There's some wicks down there, but does it take down below 35? I'd say 35.50s around there. If it closes below that, you could see some continued downside in Heinz Kraft Company and the Kraft Heinz Company. We'll see what happens in this one if it's able to come back. It was looking good there for a second. Sideways action definitely got hit hard off of that earnings report. All right. In a second, we're going to get into our interview. I did want to talk about a stock that I've been trying to draw a little bit of some warning flags, which is Coinbase, right? And Coinbase here, Kathy Wood dumping 75 million of Coinbase stock. And the big thing that I've talked about, it's not that I don't believe in Coinbase. It's not that I don't believe in, let's say, Mara, some Bitcoin mining stock or something like that. I just see too many red flags in cryptocurrency overall. And that's the biggest worry for me, is on the stock like this that has a lot of people just trying to call the bottom. Could this potentially not be the bottom that we got there on that May 5th or that May 12th, which was 40.83? Do we come back and take out that? Especially now that you're seeing even like Kathy give up on it, right? That to me, that shows a little bit more, selling a decent amount, 75 million. Pretty much giving it the chance, all it could do for it to bounce and really get back up there. But the environment for me isn't pointing to the upside in coin. We'll see what happens in Coinbase in the next couple of weeks. All right, getting out of the Kathy talk, we're going to go ahead and play a quick trailer, and we'll be back, of course, with none other than Sam Stovall, Chief Investment Strategist at CFRA Research, as we get closer and closer of course, to the FOMC meeting. Are you guys excited? I know I'm excited to see what happens here. Let's dive on in. We'll do a little trailer here, and we'll be right back.
Introducing Portfolio Synchronization with your brokerage. Now you can securely connect your brokerage account to Benzinga Pro, opening a world of personalization. Screen lightning-fast news just for the stocks you own. Set alerts for news catalysts that affect only the companies you care about. It's all possible with a simple click and a secure, protected connection. Overcome uncertainty and connect your portfolio to Benzinga Pro today.
All right, traders, welcome back. Sam Stovall, Chief Investment Strategist at CFRA Research. Welcome back, Sam.
Happy to be here, Mitch. How are you doing?
Excited to dive on in. I thought there was no one better, and I almost wish that I could have you on 2 days back to back, but We'll settle with one for right now. Of course, everybody's watching what's going to happen with the FOMC. I think one of the things that I'm going to be focusing on is mentions of the overall strength of the economy. How do you feel about the overall strength of the economy?
Well, we're certainly going to find that out on Thursday, whether we do end up with a second consecutive decline in GDP growth. And that's the unofficial designation of a recession that was coined by the economist Arthur Okun, who served under both Presidents Kennedy and Johnson. Our belief is that we're probably going to actually see about a 1% gain in the second quarter GDP. So, we got durable goods coming in a little bit stronger than expected. We also got some leading indicators coming out better than anticipated. So, it could go either way, but our belief is that we're not likely to be falling into recession this year.
Wow, that's definitely a bold call out there. I don't think I've heard that out in Wall Street. So appreciate you coming on, Sam, and bringing that. Now, another thing, of course, we're going to all eyes on the FOMC meeting today. What should we be watching in the report and maybe in the conference to kind of listen into and really focus on? Sure.
Well, when we still are looking at year-on-year gains of more than 9% in terms of headline CPI, the question is, how aggressive will the Fed be? I mean, when we started this Fed rate tightening program, the inflation rate was 7.5 percentage points above the Fed funds rate. Going back to World War II, traditionally, the Fed funds rate was higher than the rate of inflation at the beginning of rate tightening cycles. And the difference this time around is the highest on record. So whenever we have had a CPI reading of 6.5% or higher, we have had both a recession and a bear market. So I think that the Fed will have to do some very fancy footwork in order to be able to engineer a soft landing. I think they will raise by 75 basis points for two reasons, that they won't do 100 basis points. One is because if they did 100 basis points in the face of a potentially slowing economy, I think that would cause investors to panic and feel that the Fed has gone too far trying to get ahead of the inflation curve. And second, since 1990, when Fed Chair Alan Greenspan started to become very transparent with Fed rate increases, we have never had an increase greater than 75 basis points.
Now, something to keep watch is, right, the path forward from here, right? Will we see a change in the pace of the hikes? Do you kind of expect to see a change in the overall outlook for the end of the year?
I think that's going to be the key is what kind of tone, how does the Fed chair answer the questions that are going to be coming from economists around the media and the globe. And the expectation is that they're going to start to sound a little more dovish, saying that because we have taken bold steps, because we expect to remain fairly vigilant, that maybe we don't get another 75 basis point hike in September, and that the hint is that we get a 50 basis point hike. I think the market would take that pretty favorably because right now expectations are that the terminal rate would be between 3.25% and 3.5%. So if there is an indication that we are actually closer to the end of the rate tightening cycle rather than just in the beginning of it, I think investors will be pretty optimistic by that.
Something that they're definitely going to have to watch. We'll see what happens, of course, after 2 p.m. Now, a lot of earnings are starting to hit the tape. We've gotten a few of the big tech coming in. You seeing any trends in these earnings?
Well, what's interesting is that when we started the second quarter reporting period, so on June 30th, the S&P 500 was expected to post a 6% rise in earnings. Tech was expected to be up 2.8%. As we moved along, we did end up dipping in the S&P to 4.9% for a forecast, but now we're at 6.2. So you must think, oh, well, everybody is doing that much better. Not really. Actually, the improvements in earnings forecasts have been coming from energy, consumer staples, healthcare, And so basically, it's really the defensive and the inflation hedge areas that have seen improvements, whereas we've seen technology almost be cut in half, and we've seen also downward revisions pretty sharply for communication services, consumer discretionary, and other areas. So in a sense, peeling away the artichoke leaves, we find that the heart of the matter is not as encouraging as one might think.
How do you feel about the overall consumer? You know, we got that pre-announcement in Walmart and getting another hit down. We're hearing a lot of mixed signals in retail. How do you feel the consumer's health is overall?
Well, I think their mental health is not that good. We had the University of Michigan confidence level be the lowest on record just recently. The Conference Board is also showing pretty anemic confidence levels. And with inflation remaining fairly high, with the belief that not enough is being done by Wall Street, I should say Washington, to improve this, I think we're going to need to see some changes before consumers start to feel better. What I mean by that is we need to see the beginning of a decline in the year-on-year change in headline CPI. We'll need to see the discussions between Russia and Ukraine, which could then reopen the export of grain, even though it was recently claimed to have been done. The real question is whether I'll believe it when I see it.
Definitely, the battle is on there, and I've been also watching the situation with natural gas. How do you feel that situation will lead into winter?
I think that Putin is basically telling Europe, I'm in control. I have the hand on the spigot. And right now, I'm letting you know that I'm certainly tightening it to the point where it will be very challenging for Europe to be able to build its supplies in order to be able to withstand a further shutdown of delivery of gas from Russia. So I think that we need to find that many of the other G7 nations need to be able to supply Europe in general, Germany in particular, with liquefied natural gas, and be able to then use that as a source for heating come this winter.
Well, we'll definitely have to reach out to you, Sam, to see what your opinions are after the FOMC meeting. I appreciate you coming on. I'm going to give you a couple of minutes so that you can go ahead and get ready for the tape. I'm sure you'll be looking at it just like we will. Appreciate you coming on, Sam.
Always a pleasure. Thank you, Mitch.
Thank you. All right, there you guys have it. Sam Stovall, I love going to him. If you guys don't know and haven't seen him before, I mean, you probably aren't watching financial media, but excited to always have him on. I appreciate his comments. I'm excited. Here you guys have it. We got about 6 minutes, about 5.5, getting into this. We're going to take a look at the overall market. If you guys got any stocks for any reason you guys want me to check out before this hits the tape, I'll go ahead and I'll do so. I do see a lot of you guys sticking around. The question is, did we get the likes that we need to continue going? A lot of people are watching. Will it be pumping Powell or will it be dumping Powell? The question is on out there. And I'll throw it first to the chat. Let's do a little poll out there on YouTube. I have no problem doing the poll. Fed hike. And I'll put in there 75 basis points. Or do we get 100 basis points? I would love to hear what you guys have to say. I'm asking the community right now. You'll see a poll pop up there on YouTube. Fill in. What do you guys think? I'll take a look at the poll in a second here. Let's go ahead. Let's take a look at the likes. We're past the likes of 149. Can we get to 200 likes? We'll see what happens. But I definitely will stick around with you guys as this hits the tape. This is going to hit at 2 p.m. I'm already refreshing my Federal Reserve .gov to find when it hits the tape. We got to keep watch and see what happens here. All right, let's go ahead. Let's dive into the overall market here. You're seeing the SPY hold on up right now. It's holding. Let's see if it gets through that 397. One thing that you are going to see is the algos, right, pick up really quickly. You could see a big bar and then that bar get wiped out. Just be careful. The algos really work fast. And so I just want to keep everybody safe. I'm going to put this on a 1 minute. So you might see some action really quickly come in. We'll see what happens here. Does it hold or not? I think it's important to kind of watch some overall levels. A push through 400 would be a monster move on up. Of course, we have this shadow zone that it could still come back to fill. I think we could come back into that shadow and come into it. I've been watching this for a while. That's a daily gap on up there towards the 401s. Let's see what happens today. Overall, technology still leading us. How's it going right now? Let's take a look at the 5 or 15. You can see it's trying to do another leg on up. The questions will come in right when it hits at 2 p.m. Could it do that? And so you're seeing like NVIDIA. Look at how this stock is very similar to that. Trying to push on up. Nice 15-minute pattern. Trying to get on through that level. Trying to hold the pullback of 173. Get back to 175. Doesn't look too bad there on NVIDIA. All right, let me see how the poll is going here. I want to check it out here. Looks like we're getting 70% to say 75 basis points, 30% to say 100 basis points. And guess what, guys? I'm going to go on a limb here. I'm going to go with the 100 basis points just to go at least on the other side. Maybe I'm paying the contrarian, but I'm seeing a lot there. Appreciate you guys taking the chance to vote there. I'm going to end the poll now as we get into it because it's going to be fun to watch the reaction here. And it looks like 75 basis points is the perspective, at least from the chat. Let me see if there's any stock that you guys mentioned there. I saw Redbox being mentioned. I'll take a quick look. I know that some people might want to take a look at that. The daily, look at the daily just turning around here. I talked about it when it was ripping through towards the 650s that you got to remember the deal that was done by Redbox. I'm pretty sure, and I have to confirm this because I need to do a little bit research on it. I had the price before, but it's probably going to be coming down there closer towards the 4 before I say go into the 650s. I'd love to take a little lunch bet there with someone. But hey, who knows? Right now, I think that at the end of the day, Redbox doesn't have too much in their business. This is kind of more of that short squeeze type of stock. Can it hold the pullbacks? I would look for hourly pullbacks to hold. So that first level is right around here where you see that's body and the wicks. That's around the 523. It's holding that right now. But if it does get through that, the next level down for me is through the $5, getting into the 488s. All right, what else is being mentioned in the chat? I see the 2s. I see it. Redbox. We'll see what happens. I see Coca-Cola being mentioned there. Let's go. All right, let's see what happens. We got about 1 minute left here, guys. So I'm going to really quickly look at Coke here. You can see it pulled back after a really strong day yesterday, just pretty much giving up the gap. And so sometimes stocks will do this gap up move, right? They'll have a really good day, and they come back for that gap. They try to take some traders out in that gap zone. You can see it here. It definitely did come back on through there and just push down here. So it doesn't look too bad as long as it can hold this move and come back from this area. You can see how I tried to wash out through the 62. I'd make sure that that low around there holds the 61.79 if I'm bullish. But it looked to me like just a shadow fill, and it could come back after an hourly pullback. It did like 2 hours pullback, now sideways. You want to see it starts holding here, making its way back towards 63. All right, so the Fed release, the actual release, if you don't want to go through the news, it's going to be actually right here. I'll give it to you, Patrick, right now. So here's the question. What will happen? What will the FMC do? Let's go back to the SPY as we're about to get hit there. Let's go towards the 1 minute here and see the reaction here as it hits the tape. I drew out what I've been seeing so far. Now let's see what happens here. Do we get the 75? Do we get the 100? There you guys see it. It's popping up there. First wick towards the 396. Can it get to 397? A close up there off the 1 minute will tell me that, okay, now we're definitely making moves. I always look for closing, not necessarily the opening. And so here, let me go ahead and try to pull it on up here. There's the statement. I'm looking at it right now. The committee, let's take a look here. It's a lot here. All right, there you guys see the board unanimously raising the interest rate paid on reserve balance to 2.4%. Trying to get the basis points here as I read this in here. There you guys see it, unanimously to approve a 75 basis point hike rate there. So that's what I'm seeing now. Let's see the reaction from that. That's what really matters. How do we react? So I'm going through it in a lot of this here. undertaking open market operations as necessary to maintain the federal fund rate in a target range of 2.25% to 2.5%. Taking a look also at the sell-offs, what happened there? Starting in the calendar month of September, rollover at the auction amount of principal payments from the Federal Reserve holding the Treasury securities maturing in each calendar month that exceeds the cap of $60 billion per month, redeemed Treasury coupon securities up to this monthly cap, and Treasury bills to extend the coupon principal payments are less than the monthly cap. We're keeping an eye on it to see what happens here. Now we're getting that bounce there. You see how it went right into that wick, fake down on the downside. Let's see if it comes back and takes out the 397 on the high side here. What do you guys think about this? Let me know in the chat. All right, taking a look at what else is being mentioned in the report. Of course, we're not going to get the fireworks until after in the conference, and I will get you guys over to that conference. It's going to be at 2:30. Look at the SPY now trying to get through that 397. You see why I like to look at closings? Because you get wicks a lot of the times. They wick to there to 397. Let's see if it closes above the 397 mark and starts pushing back up. There's a battle on right now. The battle is definitely on. Pay attention also to like a stock like Google. Does this keep coming on the upside there and keep pushing back up? Or does it go into the red today? Go back to the SPY here. SPY trying to close up there. It closed where? At 396.80. This is the reason why it closed slightly below that 397. This will probably be the candle that if it does extend up, it'll probably extend through the 397 and close up there, but we need to wait to that closing. We got about 30 seconds on this 1 minute candle. All right, seeing some people talk about ETH and Bitcoin. If the SPY goes up, I've been seeing Bitcoin go up, so it's interesting to watch here. There, it's getting through the 397. I'm trying to take a look at the report here. I do see comments here that say, nevertheless, so here you guys seeing the committee cautioned that recent indicators of spending and production have softened. Nonetheless, job gains have been robust in the recent month, and the unemployment rate has remained low. So using that level there to describe. Officials against described inflation as evaded and ascribed the situation to the supply chains and higher prices for food and energy. And I'm taking a look at some other comments here, just trying to catch something here. The balance sheet has declined just $16 billion since the beginning of the roll-off. So something that we got to keep on watch to see how they're rolling off that balance sheet. You can see that turnaround there. Look at that turnaround right back down to the 396. So the volatility is definitely continuing, something that we need to continue to watch. I'm watching what else is being mentioned here in the note. Trying to read into this here. All right. Looks like pretty much it's pointing towards what we kind of expected. I don't see anything unexpected here. Of course, there's mention of Russia's war against Ukraine causing tremendous human and economic hardship. Of course, I mean, that's kind of expected there. They're still blaming the inflation remaining elevated, reflecting supply and demand imbalances, higher food prices, and broader price pressures. There you guys are seeing the turnaround. It's just hanging out here, so we'll see what happens. Does it go up? Does it come down? Still mixed signals is definitely in. We're going to see. Is it a trap? We'll see, you know. So are they hiking 75 basis points next month? That's the question, right? A lot of that, you're going to get more of the answers in the conference. Pay attention to the Q&A because that's the unexpected part, right? He's going to read the report that he just gave out there. So it's going to be everything that we know, but the real fireworks come in on the Q&A. That's what I would be paying attention to. All right, let me go ahead and take a look here. There, you guys see it. I have it connected there. We're going to start at the 2:30. So I'll bring you guys into that. Please smash the thumbs on up. We'll see what happens. Damn bear guy. There you guys are seeing. Now we're getting a crack to the downside. Now pay attention to see if you see some of the tech names turning around. There you see Google turning around there. How's Apple doing? Apple popped on up, now coming back to support there. We'll see how the SPY continues here, trying to close down below the range. So we talked about it. We want to see closing up there at 397 for the bullish. What will get us bearish? Let's say a close down towards 395.50s. If we start breaking through there, we're going to start giving up some of the daily gains and start retracing there on the SPY. How's our Qs doing here? Qs coming back fast from the 303.50. It's definitely moving on out there. All right, we'll see what happened there. Those red candles now, let's see what happens. Mitch, what is tomorrow's Fed talk about? Well, they're going to just probably come on out and just talk about a little bit about what they said. You'll probably hear mentions from different Fed after what was talked about in the meeting. Were they more bullish? Were they more hawkish? Were they more dovish? Did they agree with the hike rate? Would they think that we should have gone harder? So keep on watch. Now what you're going to see is a whole bunch of mention of what? GDP, because if it comes in positive, like Sam said, and it comes in at 1%, oh man, that's going to be leaving room that the economy is strong and jobs are strong, and you don't got to worry too much about this economy in the GDP number. But if it comes in negative, then we get more talks of recession. You'll hear all that talk in the media, and it'll be something to keep on watch. All right, we got about 300 of you guys. I hope that you guys enjoyed today's show. We did talk a lot of topics today. If you guys didn't catch earlier, this is Stock Market Movers. I'm your host, Money Mitch, and what do we do on this show? We cover headlines and get to the expert opinions. So rewind the tape, go catch those interviews, now catch how the reaction comes with the overall market. And of course, that report, you guys can read it yourself here. I'll give you guys the press release if you guys haven't taken a chance to take a look at it. Here it is in the chat, so you guys can just click on that and check it on out. All right, let's go ahead. Let's review what we talked about today. We had a lot to talk about. So we talked about pending home sales. We talked about signed contracts. We talked about earnings. We talked about Google, Microsoft, Boeing, Shopify, Chipotle, Enphase, Waste Management, Hilton, T-Mobile, Heinz Craft. We talked about PayPal activists. Oh, I think we missed that one. Let me get back to that one. Kathy Wood did sell some Coinbase, and of course the FOMC reaction. It's been a fun day and definitely some movement. I'm going to keep on watch some of these housing stocks because I feel like we're starting to top on out. Of course, the pending sales didn't come in good here for pending home sales. So keep that one on your radar if you're looking for something to turn around. I think the home market is going to start turning around. You're seeing purchase of existing homes drop 20% in June compared to the same month a year ago. And that was from the National Association of Realtors. So you could see construction stocks start falling. SPY still battling here. We didn't get that close towards the 395.50. So it's just chop zone right now. I'm going to look to see if it really kind of picks an area, but it probably won't happen until, of course, the FOMC conference, which is coming on up at 2:30. All right, let me go ahead and get you guys as close as I can to that conference and want to maybe start that up a little bit earlier. Like always, we'll stick around here. I don't mind holding on. If you guys got anything you guys want to check on out, throw it up in the chat, and I'll go ahead and take a look before we get on out of here. All right, so one thing that I'll definitely be watching also is, of course, the earnings that come in today after the close. If you guys don't know, let's take a look at our calendar. Calendar tells us what Meta and Qualcomm are big reports tonight. I'll be watching that. Ford, what happens in Ford. We saw GM give talks about how they built a lot of vehicles and were just sitting there because they needed some chips, some semiconductor chips. Do we hear the same from Ford today? That's what I'll be watching. Etsy, big report that I think you could see some downside action come in. Shopify, of course, warning about the e-commerce area. Etsy, do we see a big turnaround in Etsy? It's something that I'll be watching. Do we get downward action there? SPY continuing to chop around here, so we'll watch what happens that. Upwork also reporting. That'll be a fun earnings report. Then tomorrow before the open, you get Pfizer. Keep that one on watch. Some healthcare, right? We saw some bottoming in the early week. We'll see if it can continue. MasterCard report. Honeywell, Southwest Airlines, Overstock, Tilray. There's a lot going on and maybe a little wing stop if you guys are paying attention to that. It's going to be fun to watch the reports and see what happens. SPY trying to bounce here, now back towards 396.30s. Does it get up there towards the 397s? You could see how we just came back down closer towards that 395.70. Didn't really close down there. And this is the reason why I said 50. You got to move to 395.47, but didn't close down there. A lot of wicks here on the top end, on the bottom end. We're chopping right now. Let's see what happens. Do we break above this level or do we break below? And I'm just going to point it down here and put it down there. Do we break below these body close? And that's probably what's going to do it for us. Let's see what happens there. Now just continuing some of the chop. All right, guys, I'm going to get you guys on over to the FOMC conference, our stream that's going to be going live in just a couple of minutes. We'll play some music. It's going to start at 2:30 p.m. Eastern. That's really when it starts going. But I'll take you guys on over to there. So definitely smash the like before you get on out of here. And if you haven't done so before, check out Benzinga Pro. All you got to do is go to pro.benzinga.com for your 2-week trial. You don't even need a credit card. If you haven't done so before, I would definitely advise you, as you're going to be looking at what? You're going to be looking for the GDP report tomorrow, right? Expectation, what's coming out. This is why I watch Benzinga Pro when the news hits the tape. I'll see you guys, like always, as we continue going on through the day. Next up is the FOMC conference. So this will take you right over to that stream. Then after that, we'll get into At the Close with Joel Elconin. And stay tuned. There might be something extra for you guys. Hit the thumbs on up, and I'll see you guys on over at the FOMC meeting. Do we get some fireworks? Can the SPY continue the run? Does it continue the run, or do we turn red? I saw a lot of people were kind of indecisive here. Do we get on up there today? What happens? Looks like the SPY at least not reacting straight to the downside. I think that might be a good sign as you're holding on up here, but we'll see what happens in these names. Hit the thumbs on up before you get on out of here. Up next, FOMC conference. Don't go anywhere. Stick around. It's going to be maybe some fireworks coming on out of Q&A. I'll be watching.
We'll be right back.